Ever wondered how businesses decide when and how much revenue to recognize? It might seem straightforward, but behind the scenes, it's a crucial process governed by accounting standards. Today, we're diving into a big one: Aasb 15 revenue from contracts with customers. Now, that might sound a bit technical, but trust me, understanding the core principles of Aasb 15 is essential for anyone involved in business, whether you're an entrepreneur here in Sydney, a finance professional across Australia, or just curious about how the financial world works. Before Aasb 15 came into effect, revenue recognition could be a bit of a patchwork, with different industries following slightly different rules. Aasb 15 aimed to create a single, comprehensive framework for recognizing revenue. Think of it as bringing clarity and consistency to the way businesses account for their earnings. At its heart, Aasb 15 is all about recognizing revenue when a company transfers goods or services to a customer in an amount that reflects the consideration the company expects to be entitled to in exchange for those goods or services. Sounds simple enough, right? Well, let's break down the key steps involved. Aasb 15 outlines a 5-step model. Identify the contracts with a customer. This seems obvious, but it's about clearly defining the agreement. Identify the performance obligations in the contract. What exactly is the company promising to deliver? This could be goods, services, or a combination of both. Determine the transaction price. How much consideration does the company expect to receive from the customer? This might include fixed amounts, variable consideration, or non-cash consideration. Allocate the transaction price to the performance obligations. If there are multiple promises in a contract, the transaction price needs to be fairly allocated to each. Recognize revenue when, or as, the entity satisfies a performance obligation. This is the crucial point. Revenue is recognized when the promised goods or services are transferred to the customer, which could be at a single point in time or over a period of time. Now, let's look at how this might play out in a practical scenario here in Australia. Imagine a software company in Sydney sells a subscription that includes both the software license and ongoing technical support. Under Aasb 15, these are likely to be considered separate performance obligations. The company would need to determine the total price of the subscription and then allocate a portion of that price to the software license, likely recognized upfront, and a portion to the technical support, recognized over the subscription period as the service is provided. One of the big changes with Aasb 15 was the increased focus on variable consideration. This could include discounts, rebates, refunds, performance bonuses, or penalties. Companies need to estimate the amount of variable consideration they expect to be entitled to and recognize revenue based on that estimate, but only to the extent that it's highly probable that a significant reversal in the amount of cumulative revenue recognized will not occur when the uncertainty associated with the variable consideration is subsequently resolved. Aasb 15 also brought in more detailed guidance on accounting for contracts with multiple performance obligations, like our software example. Companies need to identify these separate promises and allocate the transaction price based on their relative standalone selling prices. This can sometimes involve making estimations if standalone prices aren't readily observable. So, what's the big takeaway for businesses operating under Australian accounting standards? Aasb 15 provides a robust framework that enhances the consistency and comparability of revenue reporting. While it can be more complex in some situations, particularly for contracts with multiple elements or variable consideration, it ultimately aims to provide a clearer picture of a company's financial performance. Understanding Aasb 15 is not just for accountants. Business owners, investors, and anyone interested in the financial health of a company can benefit from grasping these core principles. It helps you better interpret financial statements and understand how revenue is being generated and recognized. That's a brief overview of Aasb 15. It's a significant standard, and there's much more detail to explore. Be sure to check out the official Aasb guidance for in-depth information. Thank you for watching. Like and subscribe for more.